Good afternoon and welcome to GrainTV. It's March 11th, 2014. I'm Burgess and I'm Brock Shimbino. An interesting trade in Chicago today. Let's turn over the quotes to see how we ended. Corn was up 6 cents. Soybeans on the old crop down 6 3/4 cents. New crop up 13 3/4 cents. We'll get to that spread here in just a minute. Wheat in Chicago up 17 1/2 and Kansas City up 15 3/4 as well. You know, Logan, we did see a very interesting trade here in Chicago. Mixed trade across the grains, but really where the price action was taking place was in the soybean markets.
Yeah, you know, it really seemed like the spread between the old crop and the new crop soybean contracts was really getting pressured today. Just looking at May to November, we saw it collapse 20 cents. That's a very large one-day move for that spread. Take a look here at this chart. This is an hourly chart of the November to the May soybean contract spread. Basically on the right axis showing you the ratio between the November and the May contract. And you can see here really since the USDA report yesterday, we've seen May lose a lot of ground relative to November. In big part, that has to do with the numbers released yesterday by the USDA. Old crop stocks were cut less than expected, and expected export sales out of South America were not revised at all in yesterday's report. So that really seemed to alleviate a lot of the concerns that we've seen in the old crop market. People are still a little bit unwilling, though, to be selling into this new crop soybean contract, as there's still a lot of uncertainty surrounding the March 31st planting intentions report. So with those two factors in mind, I think that's really what's driving the price action with this spread here in the last couple sessions. If we take a look at the November contract in particular here, we've been getting a lot of calls in the office basically asking if this is a good opportunity to price some new crop beans. It's been on an exceptional run here. Take a look here at this chart, though. It's a 4-hour chart. Each bar here represents 4 hours worth of price action, and you can see here we're still riding an intact trend line higher that's really been established since this market hit its lows around January 31st. So in my opinion here, following yesterday's action where we were unable to close below it, I'd be waiting for a close below this trend line to kind of signify that this bean market's ready to roll over here. I think there still is some upside based on the action we saw yesterday, the numbers from the USDA, and the follow through that we saw in today's action with a lot of strength on that new crop bean contract.
You know, we did see a lot of price action in the soybean markets here today. Corn was kind of a quiet trade session, only up a few cents, but wheat really had a pretty exciting price action here today as well. There's a few reasons why we saw wheat rally. In the overnight session, we did get some crop condition ratings from some individual states, Texas and Oklahoma. Texas was reporting 28% of their winter wheat crop was in the good to excellent stage. Oklahoma was about 22%. So relatively weak condition ratings right now for Texas and Oklahoma. That's something we'll have to keep our eyes on as we move throughout the rest of the spring here. Something else driving wheat later on in the mid-session today was the information out of Ukraine. Russia seems to be exerting a little bit more of their power in the Crimea region once again. The big thought there is that a lot of this military intervention is going to take up some of the fuel that would normally be used to help plant the crops. So some of the crops might be unplanted this spring. And keep in mind that Crimea accounts for about 1.2% of the overall spring planted crops for Ukraine. So that's an area that we need to keep our focus on. Not a big number there, the 1.2%, but it is something that could factor into the export markets there. If we take a look at the technicals for the wheat market here on the May contract, you can see that last bar is what we saw for price action here today. We had a little bit of a sell-off yesterday, getting pulled lower by what was going on in soybeans, but it was good to see today a rebound around that 640 area, which held support. We went up and met technical resistance right around that 200-day moving average. So that area, the 665 area where the 200-day moving average is, I look for that to hold here in the near term unless we get some more bullish information to push us above it. And in that case, we could move higher, possibly test that $7 level.
Yeah, right now it seems like some of the concerns about Ukraine are starting to wane a little bit for corn, but the wheat market still continues to see strength as a result of that. So we'll help keep you posted on that situation here day by day as it develops. Coming down the pipe here for the grain market this week, we have ethanol numbers released tomorrow. Then, as always, we have the export sales report on Thursday. That's going to be a closely watched report after we saw the USDA make some important revisions to export sales for corn and soybeans in yesterday's report. We'll help keep you posted on those numbers as they come out. That kind of wraps up, though, what we saw here for Tuesday in the grain market. As Brock said on the intro, a very mixed trade. We'll have to see what comes down the line tomorrow. We'll be here to break it down on GrainTV. Thanks a lot for joining us. We'll see you then.